Today, we're going to focus on two stories taken together. And the first story is China enters central bank gold storage business. And that is a news item. That would be the cause. In the middle, must read China is going after the BIS now.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lanci, and this is the Goldfix Market Rundown. Today, we're going to focus on two stories taken together. And the first story is in the lower left-hand corner of your screen. China enters central bank gold storage business. And that is a news item. That would be the cause of what we're about to describe next. And that would be, in the middle, must read China is going after the BIS now. Those two stories taken together, we think, are extremely important, especially when it pertains to the coming change in status of gold as an HQLA asset, which will be available for repo, as we and several others have begun to sniff out. Let's start with the markets. 10-year yields are up 1. The dollar is 97.74, up 53, quite strong. The S&P 500 is 66.68, up 9. The VIX is 16.35, down 28. Gold is 37.68, up 3 and change, bucking the dollar. You'll note silver 44 on the money, up about 3 cents. Copper is 453, down almost 4 cents. WTI up 47 cents. Natural gas down 2. Bitcoin up almost 1,000. Ethereum is up 16. Palladium and platinum are down. Palladium slightly, platinum down almost 12. Gold, silver unchanged bid, and grains are softer with soybeans the weakest. Okay. Here we go. Those are the two stories. The first one is the news. China courts central banks with gold custody plan. Bloomberg reported it initially, and then we did our own coverage and breakdown of it. Now, China is moving to host foreign central banks' gold, challenging London's dominance and bolstering its push to reduce reliance on the dollar. Bloomberg reports the PBOC, through the Shanghai Gold Exchange International, is courting nations to buy and store bullion in China. In doing so, Beijing opens the door to gold ownership as an alternative to treasuries, directly challenging the dollar's pricing power stranglehold. That's how we reported it, and that's how Bloomberg framed it. Now we'd like to move to the second story, which we sent out this morning. And we're going to tell you what it really means. What it really means is that gold is going to take market share from treasuries in the repo market. And what it really means is China is going after the BIS now. Here we go. China is moving to host foreign central banks' gold. This directly challenges London's dominance and strengthens Beijing's push to reduce reliance on the dollar. It also cements China's ability to project global pricing power. Bloomberg reports that the PBOC, through the Shanghai Gold Exchange International, is inviting nations to buy and store bullion inside China. Here's the bigger picture. Central banks do not keep their gold in London for the most part. They keep it at home. London matters because the BIS uses it as a hub for leasing and hedging. If reserves shift to China, or more likely the Shanghai Gold International Exchange's global vault network, that undercuts Europe's global supply pool. The implications are major. The BIS would lose the ability to source gold for leasing. That cripples the LBMA, which depends on the BIS to maintain its model. If central banks hold their reserves in China, or not locally for European central bankers to use, traders will also move east. They already have. They need physical access to leasing. This is a direct shot across the bow of the BIS. They cannot be happy about it. Second, this is about turning gold into a financial collateral tool. If the gold is in an internationally recognized vault, it can be pledged for loans, used in leasing, or treated like treasuries in repo markets. That's where China is headed with all this. Third, and least important, though highlighted by Bloomberg, London is weakened, but the real loser is the United States. Think back to when Germany and other countries repatriated gold. They were moving it home even during wartime. Serbia also repatriated its gold. Everyone's bringing a big portion of their gold home. Why? Even though there's a war going on, because they may need it. Because some of that gold may end up in China's new project finance system. Take Poland. 30% of its reserves are in gold. If that gold is pledged in China's framework, Poland can unlock its value for infrastructure without selling it. The gold plays an important part. It stays in place, but it finances domestic development. It unlocks the buying power of gold. This is far larger than the headlines suggest. BIS's control over the supply side is now damaged. Demand already shifted east, and supply has come too as they've taken it out of the vaults. Now they're going after the leasing market. That's it. Yesterday we did a story, the market rundown. We discussed the problem that the United States is in now, and there was a lot of interest in that. So we just put this up here again. This is in case you missed it. If you want to drill down deeper, this is where we identified the bubble and explained how this is what we must do now, or this is what Donald Trump must do. This is why we went from Doge to spending. So Trump's MAGA plan A, bilateral deals, infrastructure, and spending restraint ran into walls. The Fed won't cut rates fast. This is in June. Congress won't cut spending at all, so we've entered plan B, cheap energy, a weaker dollar, and fresh stimulus. And the fresh stimulus is what we just got with the One Big Better bill. America now faces a choice, spend more or fall behind. Below, we break down key points from a sharp analysis by a hedge fund executive we just read, showing why a new spending boom is all but certain. Why this boom, and not the geopolitics, will drive the next surge in gold. The spending boom is a reaction to the geopolitics, really, and why stablecoins may matter more than AI, at least for the monetary reason. Everyone now agrees spending caused the problem. Spending will be the solution. As the saying goes, if you're halfway through hell, keep going. So that story has been popped in there again, in case you missed that. There's the chat. Again, very robust. We're busy creating content for you guys. Sorry we haven't been able to pop over. Coming soon, if we have the time, we'll get to it. And data on deck, PCE this week. Today is new home sales, probably pretty important. It's 758 right now, by the way. And that's it. I'm not going to look at the charts today. We got to get moving here on some things. But it's not going to go up in a straight line. It may not even go up for a month. But the power of gold is going to be unlocked financially. And that means you need to own gold so you can unlock the financially. I'll leave you with an anecdote. If they accepted Joe DiMaggio baseball cards as collateral to finance building an apartment complex, everyone will be going out looking to buy Joe DiMaggio baseball cards, right? Because you can pledge it without selling it, and you can use the capital, the loan against it, to build your apartment complex. That's what gold is. Gold's gone from something that is in your grandma's cabinet to having its buying power unlocked. It's unlocking the buying power of gold, which makes it must have alongside treasuries. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.